Bitcoin price all-time high will precede 2024 having new prediction. Bitcoin, BTC tickers down $27,978, has a $250,000 target for after its next block subsidy halving, but new all-time highs will come sooner. That is the latest BTC price prediction from Bitquant, the popular social media commentator who sees a rosy future for the largest cryptocurrency. Bitquant, pre-halving all-time high will not be BTC price top. In his latest post on X, formerly Twitter, on September 15, the pseudonymous central banker and Bitcoiner revealed a pre-halving target above $69,000. No, Bitcoin is not going to top before the halving, he wrote in part of commentary. Yes, it's going to reach a new all-time high before the halving. Bitcoin has just over 6 months before the halving, the event that cuts miner rewards earned per block by 50% every 4 years. Analysts argue that the resulting emission restrictions have a cathartic impact on BTC price performance, acting as something of a springboard in advance of Bitcoin seeing new all-time highs. For Bitquant, however, that alone is not bullish enough. Not only will Bitcoin beat its current record, set in 2021, before next April, it will go on to hit $250,000 per coin after the next halving cycle begins. No, BTC is not going to $160,000 because the magnitude of every pullback is large, he continued. This means it will peak after the halving, in 2024. And yes, the target price is around $250,000. Bitcoin traders diverge on having price picks. As Cointelegraph reported, market participants are highly divided when it comes to how BTC price action will play out into the halving and beyond. Some agree that higher levels are possible by April, but plenty of conservative voices remain. Last month, Bitcoin investor and author Jesse Myers dispelled any idea that BTC/USD will be trading at 6 figures between now and then. In a subsequent interview with Cointelegraph, meanwhile, Phil, co-founder of trading suite Decentrader, gave a pre-halving BTC price ceiling of $46,000, assuming no black swan event, around $35,000 by the end of the year and possibly as high as $46,000 sometime pre-halving in Q1 2024, he said. Bitcoin traded at around $26,400 on September 15, up 1.3% in September so far, per data from monitoring resource CoinGlass. Bitcoin price dives 2% on US jobs data as Fed rate hike bets heat up. Bitcoin briefly heads back down to $27,000 thanks to unexpected non-farm payroll numbers, with BTC price staging a strong recovery. Analysis: jobs data not what Fed wanted to see. Data from Cointelegraph Markets Pro and TradingView followed BTC price action as the largest cryptocurrency lost 2.1% in a single hourly candle. A subsequent rebound saw bulls recover those losses, with $27,700, the area of interest from before the data release, now back in focus. The volatility came thanks to U.S. non-farm payrolls, NFP, jumping to almost double the number expected for September, 336,000 versus 170,000. Demonstrating the labor market's ongoing resilience to the Federal Reserve's counterinflation measures in the form of interest rate hikes, the implications of the September result were nonetheless viewed as bad for risk assets, including crypto. Good news is bad news since the Fed wants the labor market to lose strength, popular trader CRYP Nuevo wrote in part of a response on X, formerly Twitter. Given this increase, it surprises me that the unemployment rate stayed the same, 3.8%. So I believe that the data will be revised down and it'll be much lower. Like others, CRYP Nuevo nonetheless eyed the increasing likelihood of another rate hike from the Fed at the November meeting of the Federal Open Market Committee. The market understands this data as a new threat for a potential new 25 BSP hike in November 1st, 25% probabilities given yesterday versus 31.3% probabilities today, he continued, referencing data from CME Group's FedWatch tool. We have CPI on Thursday next week and that'll hopefully give us a clearer view. CPI, or the Consumer Price Index, forms one of the key inflation indicators for Fed policy. Continuing, financial commentary resource The Kobayashi letter suggested that pressure was now on both markets and the Fed itself. Furthermore, the Fed pause was previously expected until June 2024, now a pause is expected until July 2024, it reported on market projections for rate tweaks. Market futures just fell 400 points after the report. This is not what the Fed wanted to see. Bitcoin open interest drains. Looking at Bitcoin's specific reaction, popular TraderSkew showed spot and derivatives traders exiting on the NFP print, slight probability shift on November 1st towards a hike, but still unlikely. A further prognosis for Fed action read, would need to see Fed tone posturing first to weigh the probability. Updating analysis from earlier on October 6, meanwhile, fellow trader Don Crypto Trades highlighted declining Bitcoin open interest, OI, but previously, this had hit levels that previously initiated spurts of upside followed by downside volatility. That's another $600 million in open interest lost since yesterday's high. Getting to the more average and healthy levels again, he summarized.